Alright, what is going on, guys? Welcome back to another video, and in this video we're going to be talking about MorningStar, one of our algorithms here in Algo Labs, and it being able to pass a challenge today. It was able to pass one, and you can see here, if we scroll down, completed, and we got the verification already, so we're going to get that set up today, and hopefully it'll be able to pass that in the next couple of days. But what I want to talk about in this video is more of the statistics behind it in this time period. So you can see here we started this challenge on the 18th of February, but we're only able to pass it on, actually started on the 21st of February. So a couple of days after when I actually started the actual challenge. So it says it ended on the 9th, it was going to end on the 19th of March, which is going to be this Saturday. So we only had like about 2 days left before I was able to completely pass, basically the challenge be over. But yeah, let's go ahead and go to the account statistics. So you can see here, we average about 2.3 positions per day. Our success rate, our win rate was 20%, and our risk reward was 6.18. So I want to talk about this. So Morningstar will be able to take more losses than wins, right? That's completely normal for Morningstar, but it has very huge risk reward opportunities, and especially right now during this very volatile market, it's able to actually make huge percentages. And not every single month is going to be a positive month, but it usually has, on a back test, over the 10-year back test, it's had over a 14% win rate. So it doesn't win as much, but whenever it does win, it wins very huge. And so, it's able to basically make you decent percentages. So like on this specific challenge, it made 10% over the last 19 trading days, as you can see here. So the average profitable trade was about 3%, and the average losing trade was about 0.4%, which is quite interesting. The maximum profit was about 5%, and the maximum loss was 1% right over here, which signals a positive risk-reward ratio. So let's go ahead and go all the way down here. What I also want to talk about is the equity curve. So you can see here that it went up, it went down, it went up, it went down, it went up. So you can see here that it had days where it won, but it had days where it lost. Now because of the winners, it was able to stay into profit above the positive side for most of the time, until I think yesterday, where it slightly went into drawdown by 1%. But I just want to say that's completely normal whenever it comes to the market being kind of shifting to kind of a volatile to unvolatile state. So the last couple of days for Morningstar has been trying to trade very kind of choppy conditions on the Nasdaq 100, which resulted to more losses than normal, and it resulted in basically stagnation and being in a range. But it was able to pass that challenge specifically today, because of the market being more momentum than usual, and Morningstar takes a lot of good opportunities whenever the momentum is very high. So going down here, risk reward 6.18, average profit, average loss. Let's see. Longs trade being 10%, and shorts trade being about 0.4%, which is quite interesting because Morningstar has been falling the last couple of days. So I wouldn't quite expect that it would be making more money on the long side than on the short side. But on the specific challenge, it actually did. And so the short side, we have about 18 trades. On the long side, we have about 25 trades. The average profit on the long side was about 2.7%, and the average short trade was about 3.4%. So you can see here the risk reward is very high at 9.31, 4.79. So I would say that most likely the reason why we've had kind of a stagnation on the Nasdaq 100 is because the Nasdaq 100 has been trying to reject off the monthly 21 EMA, which basically it had more stagnation toward the short side, and it just basically been in the range. So that's most likely the reason why. And so once we break off the 21 EMA, and if we want to continue going lower, then we'll see kind of a more kind of break off those ranges and see a very nice equity curve toward the long side. But anyway, so looking at here, we can see here during the during the period, we see that the 25 long trades and 18 short trades, the average profit, the average loss. You can see here the long balance as well as the short balance. So you can see here that we weren't seeing kind of a straight down equity curve on neither the long side or the short side, which is pretty good. This is exactly what we want to see whenever it comes into algo, just your algo trading, FTMO challenges. You don't want to see like a clean equity curve going 4, 5, -6%, -7%. But you can see here it stayed mostly up on the positive side on the long side. So on the short side, you can see here it made 5%, went all the way down, made 5%, then went all the way down. So it's kind of in the negative right now, but for most of the time it stayed up in the positive, and it's basically very small on the negative side, about 0.45% on the negative side. Going down here, you can see here the open and close for Monday, Tuesday, and Wednesday. So you can see here that for the close, Monday, Tuesday, Wednesday were positive, and then on Thursday and Friday they were negative. But our positive days are much more bigger than our negative days, which is exactly what we want to see whenever it comes into risk to reward. Looking at the result by close, the result by open, you can see here that Monday and Wednesday were our most profitable, and Tuesday and Thursday was our worst, as you can see here. Going a little bit down, let's see. So Apple and Tesla. So one of the reasons why this algorithm traded Apple and Tesla is because I actually added it into Morningstar, and that's completely my fault. It's during one of those days where the market was down 5%, just crazy momentum, and so that's kind of my fault that I added Apple and Tesla, and it wasn't really the right optimized settings, just because I wanted to catch those specific swings, and so that the chance could be basically done quicker. So completely my fault. So on that specific day, I lost about 4% or 3% because of those stocks, Apple and Tesla. So that's completely my fault. As you can see here on the statements, Apple and Tesla, it was able to basically lose about 3 or 4% there. And so if I hadn't done that, it was actually able to pass those challenges on its own much more sooner. And so that's completely my fault that I added Apple and Tesla. But just because I literally just wanted to see more opportunities, and the market was just crazy. I was eager to catch those opportunities. But other than that, you can see here that our ratio between our profitable day and losing day is about 5.33, so very positive right there. And then you can see here the number of trading days, average number of trades, positive days, average positive day, negative days, positive being the most profitable right there. And then you can see here the various position sizing. So how Morningstar works is that it only risks 1% per trade. So it doesn't risk more than 1% unless you actually change it into the settings. So you can see here that the lot sizes here are very various, right? You don't see just one specific lot size. And that's because it basically calculates 1% of whatever the stop loss is, wherever it calculates the stop loss to the entry. So you can see here that the lot sizes are going to be a little bit different right over here. You can also see that on the bottom we have a bigger kind of stock, bigger lot size, and that's completely normal. That's not from Morningstar's NASDAQ 100. That's actually from Tesla. Tesla, whenever it comes to stocks and share trading, you're going to have bigger lot sizes for those bigger being able to borrow those shares or whatever. So that's not from actual NASDAQ. And 73 lot doesn't mean you're risking 7,000 per pip or 7,000 per point. It actually means around $7 per $1, $7 per $1 on the actual stock. But anyways, you can see here results by duration. You can see here that duration, the most profitable period, was during the morning session, which is completely normal. That's how Morningstar operates. During the morning session, it actually makes really good money. That's why I call it Morningstar. And then you can see here, the average profitable kind of time periods. You can see that we have very good big positive days. We had 0.15 to 0.30, which is kind of the turnover of the day. It was not as profitable, and you can see here that number of trades was about -5% in total of those 7 trades. Let's see. Going down below, we have our open hour, and down below you can see here the maximum loss only being about 2.8%. So the maximum daily loss, we only reach about close to 3% out of the 5%, which is still pretty good. And the maximum loss of the account, which is 10%, it was only able to basically the maximum loss was about 1.5%. So not even close to the -5%, the -10%, only about 1.5%, which is really good. And it just basically shows you guys that Morningstar is able to, be profitable, and as well as, of course, it's going to be in the range, but those big winners is that gives you that specific edge that's just, really important whenever it comes into trading those huge kind of trades and huge like risk reward opportunities. But yeah, that's pretty much it. You guys, if you guys want to check out this whole statistics, I'll have them linked below so you guys can check them out and just see for yourself the results for Morningstar. And then I also want to point out AgroLabs, the website. So if you go to agrolabs.net, you guys can check out all the stuff that we have down here as well as our reports. So if we go down here, the reports are here for Morningstar. And you can see here how long it's been tested. You can see January, February, March, April, you can see the positive month. So this is basically what you can expect with Morningstar risking 1%. One of the hugest months that we've had here was about 22% on January. The average month, let's see, average month. I don't think it actually shows here. No, it doesn't. Doesn't show the average monthly profit, but you can see here the SQN score, which is about 1.92, the SDR quality number, which is about 4, the daily average profit, which is about 2.3%, profit factor, the drawdown, the max drawdown over the last 10 years, the annual max drawdown. So I could assume that the actual max profit will probably be 6% per month, the max average profit 6%. Over the last, I would say, 3 years, it hasn't had that many red months. It's only had about 6 red months over the last 3 years, which honestly is really good. It just basically show you guys that Morningstar is able to make really good money right now in this specific market during these volatile times. And so if you guys check this out, you guys have the MyFX book here as well. So you guys can check out the MyFX book on Morningstar as well as our other algorithm, mechanical levels. You can check out the FX book right over here. So if you guys want to check out the results yourself, check them out. I advise you guys to check it out so you guys can kind of see how kind of Morningstar has been operating over the last 5 to 10 years as well as mechanical levels. But other than that, that is pretty much it. Let me know if you guys have any questions at all. I'll have all this stuff linked below for you guys to kind of just watch and to look at. And so yeah, that's pretty much it. I'll see you guys in the next video.